Welcome to my latest Do You Know Your Money Minisode. I know it has been a while since I've done Minisodes. I've done a lot of interviews with other people with regards to understanding your money, whether on the personal financial side or on the small business side, which I think is vitally, vitally important. But I also think it's important that I just reach out to you and have a conversation, talk to you about things. And the thing that I'm going to talk to you today about is 2024 is winding down, as we all know, and that means tax season's around the corner. And as an individual or small business owner, you need to be prepared for preparation of your 2024 taxes. This minisode is going to be focused on the individual taxpayer, a little bit of conversation about small business owners, but I will actually have another mini-sode coming out for small business owners that'll give you a little more in-depth the things that you need to be aware of there. But before I get started, I am going to say to my listeners, I would absolutely love to hear from you. I want to know your money stories. I want to know what insights or questions that you may have, either on an individual personal financial level or on a small business financial level. You can visit www.yourfinancialmavenpodcast.com, and on that page, just page down, and you'll see the I want to hear from you questionnaire. Click on that, and I look forward to hearing from you. All right, so let's go ahead and get into it. Like I said, I want to focus on individual taxation because I think there's some really important tax planning that needs to be done. So there was a tax act in 2017 that was passed. It did things like increase the standard deduction across the board so that if you did itemize your deductions, or even if you couldn't itemize deductions anyway, you still have a standard deduction that reduces your taxable income on your tax return. So right now, and I'll go into this a little bit more, the IRS did come out with its 2025 inflation rate adjustments that still reflect the 2017 Tax Act, but the Tax Act, there are provisions, there are credits, there are exceptions that will be what we call sunsetting in 2025 if there is no update to the tax law. If Congress doesn't, decide on tax law changes and those get put into play before the end of 2025, when a lot of these will be sunsetting at some point. So it's really important to be aware of that the tax law from 2017, there were things not made permanent. One of those things is the change in the tax rates will probably revert back to what they were prior to 2017 and change kind of where your income falls for that rate, all depending on how that will work. One of the other things that will change is the standard deduction will probably go back to what it was prior to 2017 Act, which means you'd get less of a standard deduction. Now, you may be able to get an itemized deduction, but again, there are some changes with that. One of the things with itemized deductions is they reduced the floor. The 7.5% floor is what you used for medical expenses, potentially to be able to take them on your return. That would go back up to 10% of your adjusted gross income. So for example, if your adjusted gross income is $100,000, you would need to meet the $10,000 or 10% floor to be able to take those out-of-pocket medical expenses. Currently, as it stands with the Tax Act of 2017, it's at 7.5%. So that is just an example of what some things will sunset and change. This, again, and I'll put the caveat out there, this is not anything political. This is based truly off of the 2017 tax law and the changes that are coming with that. One of the other things that you did note from the 2017 tax law changes, and these things I believe will remain permanent, is there will be no more personal exemptions. You used to be able to get some deduction for if you let's say, filed jointly, your spouse and however many kids you had, or if you had kids, you could get some exemptions, or as a single taxpayer, you would get one exemption, but they are no longer doing that. As you're aware, if you're a W-2 wage earner, the W-4 that you fill out is different. And so where I'm leading to on this is it's very important, and I'll leave the links in my podcast bio, that you go and you utilize the IRS's withholding estimator calculator. It actually, it takes about maybe 15-20 minutes. You have to have prior year tax return kind of there, also what you think you're making for 2024, and it'll give you an idea of if you're having enough being withheld. And if you're not having enough being withheld, you have a couple of options. Of course, you could have extra being withheld from your W-2 paycheck, or you could pay an estimated tax. Now you're saying, well, I'm self-employed, I'm a gig worker, I have a small business, and that is where I say estimated taxes is important. I get a lot of times I'm getting double taxed as a self-employed individual. The issue here is you have to pay self-employed taxes, which is your Social Security and your Medicare, as both the employer and the employee, because you're self-employed. In addition to that, your business income that you make on the business, well, that is what you earn. So your earned income gets taxed at the rate like a 22%, 12%. 22%, 12%, things like that. So it's really not that you're being double taxed. It's you're obligated to pay your Social Security and Medicare taxes. And if you're not having that withheld on a W-2, then a self-employed individual has to do it on their own. But it's really important to go ahead and check your withholdings. I say annually, and really you should be doing it semi-annually. You could check it towards the end of the year too. For small business owners, you just need to check to see, do I need to make any estimated tax withholding? So that is important to be aware of that for the estimated taxes being withheld, or the withholding taxes being withheld, to make sure that, if you have enough taxes withheld, you may not owe anything. You may get a refund. If you don't have enough withheld, you may have to owe something. And then, of course, some of these things apply for your state and potentially local if you live in an area like Pennsylvania, like I do, where there is local taxation as well. So it's something to be very aware of for that. I'll leave the links for the IRS adjustments for the tax rates. Standard deduction, they'll increase for 2025. Again, unless some things change with tax law changes, that the tax rates are from 10% up to 37%, but the taxable income levels have shifted and have been adjusted, something you definitely need to pay attention to, whether you're single, married, filing jointly, head of household, widower, things like that. Also, there's some adjustments for health flexible spending accounts. So definitely take a look at that, because some things, again, if it gets sunset, may go back to the 2018 rates or prior. The 2017 Tax Act was passed 2017, and I believe everything went into play in 2018. So one of the other things I want to share with you that I think is just as important, and I say this to all my clients, you should absolutely go to the IRS website, and if you haven't already, set up your irs.gov account. This account is your account based off of you as the individual taxpayer. If you file married, filing jointly, each of you need to have your own account because you're still considered individual taxpayers in the eyes of the IRS. It will show you the returns you have filed, do you owe anything, the refunds you may have gotten, any credits you may have gotten. You have notices. They're starting to put the notices online, or they're going to be starting to do that. You can also pull prior wage earner reports, prior tax returns. It gives you the ability to, if you are working with a tax professional and they ask for power of attorney for particular tax years, you could get those requests automatically. And one of the other things that it does, and I stress this every year, is to get your own identity PIN. It definitely helps to reduce theft of potentially having your returns filed falsely. I have seen that. and it is a mess. If someone files your return and you go to file your return and it gets rejected, what's happening is they're saying the return's already on file. Then you need to amend it. You need to call the IRS and say that wasn't me. So it's just better to get these identity pins. You say, well, I got it last year. Why do I have to get it this year? So you do need to get a new PIN. I believe they're 5 digits every single tax year. You could check with your state to see if you need an additional PIN. Usually when you file your state with federal, that should cover it. And I know in state of Pennsylvania, we have local taxes that we pay to local taxing authorities. You could ask if they have an identity PIN you can use on their online sites, but I haven't seen that, and as a tax preparer myself, as a CPA, I go to their website to file my client returns online. So I think having the identity PIN is huge. I absolutely recommend it, but just remember you have to do that every year. And one of the other things I want to talk about is, since we're coming up to the end of the year, is charitable contributions. The biggest thing that's going on right now are phishing scams, fraud, and the IRS is really saying you need to be aware of that. The biggest thing I can tell you is if you get called from somebody looking for a donation, you need to find out what charity they're from, the address of that charity, and the contact phone number. What you can do then is you can look up the charitable organization on the IRS's website. They have a tool to make sure that they are a legitimate, eligible for donation, charitable 501c3 organization. They'll pressure you probably to give money over the phone. Absolutely don't do that. Don't give them anything identifiable. The biggest thing you can say to them is, oh, great, thank you for the information. I'll take a look. I'll get back to you, and I will make my donation another time. So definitely something to be aware of, especially since a lot of spoofing is going on where it may sound like it is a charitable organization based off of other names that you are well aware of. So definitely be aware of that regarding charitable contributions. The other thing with charitable contributions is, again, things like crowdfunding sites, they may not be definitely a donation. So if you make a donation through a crowdfunding source, you may not be able to take it as an itemized deduction. And remember, you have to be able to meet your itemized deductions above the standard deduction. So even though you are donating, which I highly love, I love that we give to charitable organizations, there is no guarantee that you will absolutely get a tax deduction for that. So just to be aware. And the other thing is, like I said, tax season is coming up. You should start seeing tax documents come to you towards the end of January and February. I highly recommend not having your returns worked on until the second week of February or later, just because you may not have all your tax documents. If you don't have all your tax documents and you file your return and then more tax documents show up, you'll need to do an amended return, and it can really delay the process, especially if you're getting a refund. The other thing to be aware of is when you're hiring a tax professional, if you decide to go for a tax professional like a CPA, that's what I am, an enrolled agent, you want to make sure that they are legitimate. They should have what's called a PTIN number, a professional tax identification number, and you can ask them to see it. You can look them up on the IRS website to make sure. I think there's a PTIN directory. We're obligated to get them before even tax season starts. I just renewed mine. So you want to make sure you're doing that. And you also want to double check that they're going to be signing off on your tax return. That is a big red flag. That is what we call a ghost preparer, that they refuse to sign off on the return, that they ask you for cash, not as a retainer, but they ask you to pay them in cash, or they give you particular positions, tax positions that are too good to be true, and most likely they are. So it's really important. The biggest thing I can say to you is, when you're looking for a professional, they should be giving you an engagement letter. And this engagement letter lays out what they're going to prepare for you, the liability involved with the preparer, with you as the client, different kinds of things that go along with that, talking about digital assets, talking about what your fee is, when it's owed, stuff like that. So you want to make sure that you get an engagement letter, and then also hopefully you'll get a tax organizer, which will help you to prepare your return. And along with that, if you decide not to have your returns prepared from somebody else, you want to do them, there's a couple of options. There are the tax softwares. Just remember, if you live in a state like I do in Pennsylvania, any local earned income tax returns that you need to file, you have to go to the local taxing authority directly. Your tax software will not file those returns. Or you could do the IRS Direct e-file. Most states are now connected to that as well, so you can file your federal and state through them. You can also check with your own state to see if you can file. Also, if you are a low income earner, there is something called VITA, Volunteer Income Tax Assistance Program. They'll usually have their offices start sometime in January. You can check through the IRS site, I think also through United Ways, for what's called VITA. So I hope that this gave you some great information. It's really important that you get prepared. I know that it's holiday season time. I know that it's an election time. I know that there's a lot going on, but it will help you when tax season comes. And remember, most returns for individuals are due April 15th, unless it falls on a weekend or a holiday, and then it gets extended to the next day. So I hope that you got information out of this Do You Know Your Money Minisode.